Hey, folks, welcome back to Soaring Profits. As always, it's
James.
and Patrick. And one of the things that we've been talking about at great lengths with some of our shorts, please check those out. We got them on YouTube, Instagram, and TikTok, is what's going on in the world right now. And we talk at great lengths about some of the finances. James, you've been talking a lot about the personal changes and what's making yourself better.
I've been like running a whole domino effect journey. Basically, that you take that one step, you move in one direction, and you do one little thing, and it's a domino effect that just builds upon itself, that helps heal your mind, body, and soul. And you've been talking a lot about how to heal your wallet. So it's kind of a process like I've been going through, and you've been going through as well. Like, so while I've been experiencing this journey of setting goals and making goals, a lot of that has led me towards making money. And part of that is this podcast, but a lot of it is learning and watching your videos and learning what the stock market is, because I don't have a sweet clue. All I know is right now I'm losing money in a big way on the stock market. No fault of your own, but just the world has gone crazy.
Right.
I don't know what's going on.
Well, let's have a conversation about this, and let's dive in this a little bit deeper with some tangibles that people can take away from. So if you've been following the shorts that we've been doing, guys and girls, folks, what we're doing is we're trying to dissect a market that like we've never seen before. So what I want to do today is I want to work with James here, and we haven't pre-planned this. What I want to do is I want James to come up with a company, and I'm going to do an analysis of this company right now. And we're going to take a bit of a large perspective of where that stock, where that company is going to be going. So let me pull up my computer here.
So you want me to come up with a company?
Right. So something has to be publicly traded because this is what we do.
Right.
So what we have right now is the Nasdaq up. So what's a company that you're interested in?
Well, as you know, I'm having a little bit of a car trouble. Got a brand new car. Well, used brand new car. It's a great car. It's sleek. It's beautiful. Computer problems. But the only thing that's really good on it is its tires. So let's do some Goodyear, because I don't have to worry about its tires.
Okay. Who owns Goodyear? Let's take a look.
That's a good question. I don't know.
Good G OOD. Obviously, you can see that we haven't looked at this yet.
Gladstone.
I don't even have it up here. So
Goodyear, there's Goodyear.
India company. GT Tire Company on the Nasdaq. Again, what we're doing, folks, is we are in tradingview.com. As you can see, this is a free service that you guys can all check out. So when we edit this, just come into my camera now. We will pick this and we will add it. So we are going to bring up Goodyear. Okay. So now.
So you mentioned the Nasdaq. Let's break it down, back up a little bit. Let's pretend that the people out here don't have a sweet clue, like me, are maybe a little bit ignorant. What is Nasdaq mean?
So the Nasdaq is the best way to explain it is that it is the tech sector of the U.S. economy. So basically, what it is a number of companies that are listed on an exchange. Okay, so everyone's heard of the New York Stock Exchange, the Chicago Commodities Exchange, these are kind of general things, right?
Right.
Well, these are stocks that are traded, and they are, I got to bring this up here. I don't know why I didn't just flop right into this. Goodyear. That are traded on it. So the Nasdaq is a general indicator of where and what. Why are we not getting this to come up?
So we've been talking a lot about our tech guy. He's not great. So we may fire him, or we may give him a raise. Not sure. Last night he was working into the wee hours of the morning to try to fix
there we go. So now we got Goodyear. We got Goodyear. Okay.
Yeah.
So this is Goodyear currently back to May, April. We're going to start off on a macro and then go to a micro. Okay. So when we look initially here right now, like everything that's been in the stock market, it's getting beat up. Okay. So this right here, right now, as we're looking at it, is from the 20th of May, 2021. It was priced at $19.62 a share. Okay. And it is currently sitting at $11.63. Okay. So we're going to go back and we're going to take a look at a 5-year. Okay. This is the 5-year of Goodyear. Okay. What's going on? What's the trend? Okay. So a number one thing to be looking at in stocks is finding trends, finding patterns, and then trading off of those. Okay. So Goodyear for the last 5 years has been channeling down, trending down. Okay. So what happens right here? This becomes March 2020. James, would you agree that we had kind of a bit of an incident that occurred in March
I
of
seem to
2020?
recall something zombie apocalypse or
Right.
something like
Okay.
that.
So I know that this all seems really complicated and I haven't said anything yet, but over the last 5 years, we have a downward trend. Okay. So if I was to bet money on Goodyear right now, if I was to think that Goodyear stock was going to go up 500%,
Probably not.
Why
If it's been
would
going,
it?
if it's going down without any problems, why would it start going up with problems?
And
Right?
and what problems do we have, James? We have
Well,
the
there's
price of oil. We have the price
Yes.
of literally everything soaring. So
Mhm.
we've got a world that's falling apart in front of us. Why would it change its directional pattern at a snap? It's not gonna. So when
No.
we go back here, what we need to do is we need to look at swing trading a stock like this. This has got, if you buy and hold, if you bought this years ago and you're like, I think Goodyear's going to make a really good tire, you're broke. You ain't got nothing. You
Right.
can't put the pool in the backyard. You can't send the kids to college. You're broke.
Yeah.
Okay. And this is what you folks are doing with your mutual funds every day. You're investing with Tim. Tim was a guy who you said, hey, Tim seems to know what he's doing. He must know more than I do. They don't know nothing. There's nothing to know because what they do is they go to school and they trade this earnings report and that earnings report. And that's great. That's great if you want to make 3, 4, 5% on your money. They might get you that. I'm going to bet that most of you, they don't though. But they got to keep you in the game. Okay. So what we're going to do is we are going to chart this. We're going to chart it from a 5-year and we're going to chart it down to the 9. So we've talked before at great length about support and resistance. Okay. Everybody remember support and resistance?
Yep.
Okay. So what we need to take
So
into
the support is the line underneath the bottom.
Yep.
And the resistance is the top line, the heights. Is that correct?
That's right. So your support is your floor.
Right.
Your resistance is your ceiling.
Right. Yeah.
Okay. So
if the stock goes up, it hits the resistance. And if the stock goes down, it hits the support.
Support. Okay.
So you can determine kind of the direction a stock's going to go from past supports and past resistances.
Well, what's the Einstein saying, right?
Yes.
You're doing the same thing.
Same thing over and over again and expecting different results.
Right. So our same thing over and over again is watching it fall down and catching these little movements and going, oh, this is it, man. They reinvented the wheel.
You're right.
Don't be ridiculous. Come on.
They've had a new rubber.
Right. So what we're going to do here is we're going to chart this out. We're going to put some trend lines. Okay. So we're going to call this the top and we're going to draw a trend line down. Okay. There's channel 1. Here's channel 2. And what we're doing when we build these is we are connecting as many of these body candles as we can.
Mm-hmm.
When you get the bottom wick, so in a candle, we have a body and a wick. I'm trying to find a really good one here that we can kind of get in on. There is a body of the candle that is the fatty part, and that shows price action. And then you got the wick that comes down the bottom. Okay.
So what is price action?
So price action is on whatever we're looking at. So this is a daily candle. So each one of these is daily, right?
Mm-hmm.
This is the price, the top and the bottom of the price.
Oh, so basically just the action that the price did in that one day.
Right. That
how
would be
low
why
it went and how high it did. Okay.
Exactly. So what we're looking at here is we're trying to put the tops and bottoms of each day. Okay. So again, we go back here from the, let's call it the 29th of January, 2018. What happened on that day?
29th of January 2018.
Nothing.
Don't remember nothing.
Who cares?
Yeah.
Nothing.
Actually,
Nothing.
shortly before forget it.
Right. No, but like, do you get what I mean? Like nothing.
Yeah,
nothing
happened.
necessarily
Nothing
happened.
should have happened unless, I don't know, something happened to the company itself.
Right.
That we don't know about or remember.
And when you look at it here, what it did is it hit its ceiling again. That's all it did. Right. So it hit its resistance. It hit its resistance. It hit its resistance. They bought it back. They're like, oh gosh, they've invented rubber. No, they didn't. Because why do they think that it's going to break through again? There's no. Okay. So this is probabilities. So it flushes down. Okay. Now we get down into March 2020, pandemic, zombie apocalypse. We can't talk about anything that's going around in the world, but it's not good. Right.
And everyone has to stay inside and not drive.
You got it. Mm-hmm. So what we have here is, well, it starts going up. Well, why does it start going up? Oh, well, did they reinvent the wheel? Did they come up with new rubber? Is Goodyear going to be the saving grace of everything in the United States?
Maybe they were selling masks.
Yeah. Yeah. Well, no. What they did is they got a shit ton of government money.
Oh, yeah, that's true.
Right? Yep. Everybody just got stimmies. Yep. They went out and they got money. Well, why did they get stimmies? Because the government said, we got to keep the economy going. What are we going to do? If we don't keep the economy going, holy mackerel, they're going to hang us in the streets. Well, what do? We then are able to chart new supports. Okay. We're charting. How many times has it hit this? How many times has it hit it? How many times has it hit it? Well, where are we now? We're in February of 2022. And we break.
That's going to be a meme, man. You go ahead. How many times did it hit it?
Right. That's going to be a thing.
If you're out there and you know how to make a meme, do that. That would be hilarious.
If not, put it in comments because I want to make it. And I'm going to patent it, and that's going to be the thing.
Patent pending.
Patent. So again, this is your resistance, okay? Yeah. What we're looking at now is we're just general charting. This is 5 years. This is huge macroeconomic movements, okay? Right. What do we have that happens in, let's look at our peak, right? We have January of 2022. Well, this guy in Russia said, we don't like you, and we went to war. Boom, 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 right? So now there's a couple things that we want to look at here, okay? We want to look at the March pandemic. This is the anti-recession recession. So America stimulated their economy. They leveraged their future. The world did. I'm saying the United States, but the world did.
No, Canada did.
Everybody.
Yeah.
They leveraged their future.
In a bad way for the same reason, right?
193 million people locked down in China. Yeah. That's nuts. Well, everyone around the world, but like right now, 193 million people. Right. Well, when they make their rubber tires in China, well, they're not making their rubber tires in China.
They won't need them. Yeah.
Well, no, but they're not making them. No, they're not building them there because they can't get them on boats to get them back here. Okay.
Right. True.
So does this become, when they start locking down China again, does it become an economic problem for the United States? Yeah.
Absolutely.
Right? Yeah. That's inflation, folks. So what we're doing again here is we're going to chart this out. We've got a new trend line. So trend lines create large movements. Okay. They look at large movements.
So by movements, you mean changes in direction that are deep or big or high, like big valleys. I mean, low valleys and big mountains.
Right.
Basically.
Okay. So then what we can start to look at, now that we have a general overview of the way things are going up until here, right? What we have is a new directional change with all the stimmy money. Okay. So this stock, when it came up like this, when it tested the support, then it ran and hit the resistance, because you could have charted this all the way through. Like I could extend this out, right?
Yeah. And see where it's going to go next week.
Right.
Yeah.
Okay. So when it breaks, here's where buyers step in. When we chart this here and we chart across, okay, So say this was our little movement here. Hey, yeah, we're getting lots of money coming in. Oh, we had a big day. We should keep an eye on Goodyear. There seems to be some movement here. Let's look at it. Oh, maybe okay. Oh, well, it held the support here, right? It bounced back into that channel. Okay. Well, let's keep an eye on it. Keep an eye on it. Keep an eye on it. When it hits this first candle here, okay, and it breaks above that resistance. Remember that top is a resistance.
Top line.
Okay. I'm going to try to get as tight as I can here. When it breaks above that resistance, see how it gets sold back real quick, almost to that resistance? See how it gets bought back down?
Yep.
Okay. So it gets sold. It runs up, gets sold back down almost to the top of that resistance. Okay. Then it needs that next day to close above it. Okay. This is when buyers step in. The next day after it closes above that resistance, it's called a breakout. And then buyers come in and go, whoa. Everything in the trading world is done algorithmically now. So everybody in the world is looking at the same thing and going, oh, I broke the resistance? Oh, shit. Whoa. Right up. That's what it's doing. The computer trading for these big, massive hedge funds step in and buy. They buy it here. This is how stupid this whole game is. They buy it here at that point, and they take their 34% and walk away. What did they do? They took their 34% and they walked away. See this red candle sucking down? Yeah. That's it going again. That's right. Being sucked down. Okay.
Right.
So what we're doing here, folks, is we're putting trend lines. Now this becomes a new trend line. Let's see how well it comes together. Right? We're going to chart it. We're going to chart it. We're going to put a new bottom. This becomes our new bottom. New bottom. New bottom.
Now you're just trying too hard.
No, but this is the point.
Yeah.
Is that it tests, fails. When it doesn't meet this requirement, look at the next candle. Look how big it is. It's huge. Why? Because it broke support. Everyone jumps out, bail out, sell. Okay. Then it gets back. Excuse me. Then it gets back into this existing channel, right? If we draw this out, again, in perpetual line drawing, see how it gets back into this channel? What's it hit? It hits support. Buy, baby. So you're running through here. Hits resistance, sell. Now, this is another pattern that we come across all the time. This is what's called a double top, and it's very bearish. Okay. What this is showing is that the market, it's had a big rally, right? Let's do the measurement on what that rally was. Okay. So it's had a rally from here to here. So in 55 days, you could have made 55% on your money. Okay.
Right.
Then it pulls back. So if you held on to it and you're a diamond handser, right, you would have lost 22% given back. Right? See how this all starts to make sense? If you trade instead of diamond handing, then if you handing, well, I'm not selling.
No matter what, I'm keeping the stock.
Right.
Because it's gonna go.
It's gonna make me billions, baby. Yeah. So then the second resistance is another 27%. So you've got the run up, hits resistance, comes back down, hits support, no, it doesn't hit resistance again. Well, why is that? Because it said here, nope, I didn't get through. So why would you buy here if you know it's going to only go there? Right? If you know it's going to hit its head and fall back, why would you buy here? You'd have to be an idiot. Do you get what I'm saying?
Yeah. Or you like Goodyear.
Or you like yeah, unless your RRSPs or your pension is from Goodyear, you ain't buying at that level.
No.
Well, what happens? It's a double top resistance. Okay. That's very bearish. Anyone charting this, any computer algorithm looking at this goes, sell. Okay. This does not care about economics. It cares about patterns. Same thing
Right.
here. We had a top resistance. You had mild breakthrough, but it consolidated and it flushed. We can go back countless times in history. Resistance, resistance, flush, right? Resistance, resistance, flush. Resistance, resistance, big flush, bought back, right?
So basically, what he's trying to tell you is buy Goodyear. I think that's
I'm saying get the hell
no,
out of
get out of
Goodyear.
Goodyear.
Get out of Goodyear.
Don't visit Goodyear.
Yeah.
Don't say hello to Goodyear. Goodyear's done.
So let's take a
Now,
look at
that could be for several reasons. Like I know there's been a lot of other tire companies that have come out cheaper, but just as good.
I'm telling you right now that the macroeconomics don't matter as much as people try to give them credit for.
Really?
So here we are. We're going to.
So what you're saying is it doesn't matter that another company came out like Toyota, not Toyota, it's something like that. Tires. They came out. Toyo. They came out with cheaper, just as good tires, and you're saying that has nothing to do with the stock.
Okay, so here's a great example of this, and you and I have had lots of conversations over one of our favorite stocks that is getting killed right now, and it's Palantir Technology. Yeah. Okay, so I told you 2.5 months ago that Palantir could go to 6.
Yes,
it could run down as low as 6, and at the time it was about 20.
Yes, it was doing all right.
Yeah, it was, and you're like, okay, whatever.
Whatever.
Right. I think it hit 694 today.
It did. And it doesn't look like it's going up.
Well, that's what I'm saying.
Yeah.
Because the charting, let's take a look at Palantir. Well, hang on. Let's do this one and then we'll go back. Okay. Mm-hmm. So now we're looking at the 1 year on Goodyear. Okay. We are going to start.
So this is the last year now.
Right.
Okay.
So I'm used to this on my iPad and I do most of my best work off of that. But so now what we're going to do is that we've got our trend lines set up. We're going to start coming across and we're going to start putting highs and lows. So for support and resistance. Okay. The high, remember, hits his head off the roof. Okay. Where's other strong supports and resistances? Right. We're just going to fill them in. I've got them green here. I'm not going to go through them and color them all for everybody.
No, I wouldn't bother.
Right.
I think people are probably starting to get the point. Basically, what we're trying to do here is we've had a lot of people say to Pat, especially, not so much to me, that it's hard to follow what he's talking about. Like it's hard to follow how he's talking about the resistances and the supports and how you graph it and all that. So we thought it would be a really good idea if we took some time here and he explained it to me because pretty much I'm an idiot, and then hopefully you guys would have a little bit of a revelation on it, and then the next video that he does when he starts getting in deep into the stocks again, which he's planning on doing. We have this program that we just worked out last night. I spent about an hour on it trying to get it up and running, and he's going to start throwing out some videos. You'll actually see his handsome face while he does it, which is pretty exciting.
Dear.
And he'll go through some stocks, some really important stock information. So we thought it was important that you kind of understand what he's talking about on a baseline. So that's what we have here. But if you have any questions, like maybe I didn't ask a question that you wanted to know, then take the time to type it in the comments there, and Pat will get back to you on it. So don't be afraid to ask us some questions.
Absolutely. So
how are we doing there?
Before we wrap it all up, if you can see what I'm doing here is I pick the tops, I pick the bottoms, and I just chart it out. Now, when you look at that chart, it just follows its patterns, right? Like why is a year ago? Okay, so we just did this year. Okay. So this now is picking up support from back in March. Okay. This here hit resistance, fell down, picked up support, hit resistance. This is just sideways trading, right? Sideways. And then it broke through. Well, it didn't just like break through and like kind of sit there a little bit. It broke through like a knife through butter, like, okay. But then it picked this up, right? So again, my prediction for Goodyear is sideways trading, likely for a couple days, and then down again.
Okay, wait a sec. Sideways trading. What's that?
Yeah. So again, this is sideways. This is consolidation within a price range. But what do we have here? We have another top and another top, right? We've talked about this. That is a double top resistance. Okay. This is called double bottom support. So I think you're going to see a bit of a kick. Now, this is where you go to your macroeconomic trends. Is the war in Russia going to end tomorrow?
Not
Like if the war in Russia ends tomorrow, this stock comes back up. But it's not gonna. We have more bullshit ahead of us. So now we're gonna hit resistance, and I think we're gonna see a little trading sideways here until something pulls us back down. This is the probability.
Sideways trading is when you're just going sideways. You're not getting big highs, you're not getting big lows, but you can trade up and down inside it.
But James, you can make a shit ton of money.
As long as you predict when it's going down, the candle's down or the candle's up.
But what you can do here,
sideways, right?
Right. But what you can do here is you can take and set a stop loss. Okay, so you realize that this was a stop loss. So when you enter a trade, you buy, you think that, okay, it's at the bottom and you're like, hey, Goodyear invented the wheel. Okay. It's going to go way up. So you buy at 11, let's say 70, you put a trade in and you put a market order or a limit order in on your broker, whether you use Wealth Simple or any of the other brokers that are out there, right? They're all available for you.
Through your bank or
anything. Right? Yeah. So let's say you buy at 1170, you get picked up on the way up as it consolidates, right? We had a good day today. It was a bit of a rebound day. I had a video earlier talking about what I think it is that this is what's going to be called a bull trap, where the market pulls liquidity from retail and then they flush on you again, right? I think we have a long way to go down. We are, folks, we are in a recession, whether you want to believe it or not. We're dead. We just haven't laid down yet. Okay. So I'm calling right now that we are in a recession, whether we have a paper recession or not. That's the 2022 is going to be a bloodbath. We've already seen it. It's going to be a bloodbath. So what I'm saying is that if you can get these little movements and chart these little movements, let's see what would that movement be? If you were to buy it now at its support to its resistance is 10%. Okay. 10%.
If you could judge it, which you're showing them how to judge it,
you
could earn 10% on your money by buying at the bottom.
I'm going to say within a few days.
And then jump up to the top.
Yeah, sell here.
So then you use a stop loss, and a stop loss is?
So a stop loss is when you put, you buy in at 1170. Let's call it 1150 just for nice round numbers, okay? You buy in here and you're like, hey, I'm willing to bet, for lack of a better term. I don't want you betting on the stock market, but I'm willing to bet that 1150 is the bottom, which realistically probably down here a little bit is actually the bottom, 1123. But I'm going to bet that I'm going to be able to get 1280 out of it, okay?
Okay.
Well, what if tomorrow the world is nuked? Something unforeseen
or they find out
happens.
that Goodyear rubber
is killing babies.
Belts or whatever.
Right.
Yeah, so it plummets.
Right. So what you do is you take as much as you're willing to risk. A lot of people use about a 4 or 5% stop loss, and they come down here and they set a price at, say, 1090, maybe 11, right? And that is your sell. That's, shit, it went the wrong way on me. I want it.
So if you're not watching the stock,
right,
and
you don't lose
say
everything.
You're in your truck and you're driving somewhere, and it drops to that 1070, it just automatically sells for you.
It automatically sells for you. So that's what's called a stop
So
loss.
that's a stop loss. And then a limit buy.
So a limit buy is when you put your price in on what you are willing to pay for it. So again, 1150 per se. Right. And you're like, okay, then I can do what's called a take profit. So I can set my take profit price at 1290, right? So from 1150, the stock trades all day and it trades. And if it comes up and hits 1190 throughout the day, you make 10%. If it goes and it drops down and hits your stop loss, okay, you lost 4 or 5% on that trade. Right. Live to fight another day.
But you don't lose everything because
you don't lose 90%.
Yeah.
Right.
So it's just basically the computer is protecting you because you've decided this is as much money as I'm willing to lose.
It's
and
insurance, baby.
And this is where I think I should sell.
Right. It's insurance. And what it
Right.
is, it's that, when you're driving 100 miles an hour down the road and you got the windows down and you're smoking and you got a beer in your hand and you're living
And the
dangerous.
blonde girl beside you.
I bet you she's beautiful too. I can
Or a
picture.
redhead.
I can almost see the breeze blowing through my hair in the beach here. Right. Yeah.
Okay.
What it is it's your insurance. It's your safety net
Right.
when all of a sudden Granny pulls out in front of you in the old El Dorado, right?
Right. Yeah,
That's your
and
safety.
you're not driving a Tesla. Go back and watch that.
Yeah.
Yeah.
So what we're doing here is we're catching these minor movements in a down economy, right? So now we've put these lines up here. They mean something this year, but let's go back and let's see what they mean in history, right? Let's see if they actually mean something long term. Holy shit, they start to mean stuff. Why do they mean stuff? Oh, I'm playing with my big macro stuff here. Oops. But do you see how our lines literally go back in history and they provide resistance?
Did I just shrink?
And support. No, you're standing up on top of your head now.
This is interesting. I don't know what's going on, folks, but I'm a giant.
But as we see here, right, these trend lines mean things. And it's because everybody is looking at them. Everybody. Right. Everyone all over the world, all the computers, all the everything. I'm trying to get back to where we see this is in 2016. It's a support. I want to see when we can get way back here. Again, that's 2015. That's a support. Right? This is a lot of consolidation. In 2014, it's a support in 2014. Whoop, I'm moving lines. These lines, they don't draw themselves. They mean something. You have to learn this stuff. Yeah. You have to learn this stuff.
Well, folks, I think that's enough for one day. I know my mind's a little melted. Yours is probably too, if you're like me. But, now you can watch this video again, pause it. Like I said, comment. Pat's very knowledgeable and he will be sure to answer your questions. But now you get a kind of idea of what all these terms mean. And that, that's what I did with him like a while ago. I sat down with him while he was talking. I'm like, what do these things mean? And then once you know those terms, you can follow along so much easier because you understand, all those terms that he's using. So I hope to help. I know it helped me, a little refresher. You're a genius. You definitely know this program.
Well, you, sir, are floating. It's an odd thing we got going on.
I don't
know
what happened. All of a sudden, I grew big, and I'm just going with it. I have no hands. I grew big. We're firing the tech guy.
It's you. So we'll see what happens. Yeah.
Oh, wait. No, we're not firing. We're giving him a raise. Wait, stop.
Thanks again, folks. Appreciate it. Again, Soaring Profits. Please like and subscribe. Share this with people.
Share it.
This stuff literally, I know that James, when he's talking about his mind, body, and soul, and the stuff that he's putting out there, this is our channel is really a totality of helping people. And James is helping people through his journey, and I'm trying to help people that they make better financial decisions. And through this, we're going to be able to dive deeper into your own personal life, into your finances, hopefully into some of the relationships that you have as well. So again, thank you folks for coming each and every day with us. This has been an awesome journey. We love doing this with you guys, and we look forward to seeing you next time. Thanks again.
Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.